All right, welcome back. My next guest opened up his notes to us this morning with a statement that I wholeheartedly agree with. And he says that Scott Bessent, our Treasury Secretary, he's just not running the Treasury. He's also running the narrative for the country. Now, my next guest goes on to say that almost he's acting as a de facto chief marketing officer of the United States. So I think maybe we should formally announce someone to take that position. That's be a good idea, right? In the meantime, Mr. Bessent is doing a bang-up job at being that chief marketing officer. We need to continue to talk about the things that really can go right in this economy and not the things that can go wrong. Those that worried about the latter, well, they sold their portfolios on April the 8th this year, and look how well that worked out for them. Let's bring on our next guest for more of his thoughts on this. Please welcome to the show, Mr. Lou Basenese. Lou, thanks for coming on. And again, since those April 8th lows that a lot of people were asking, they're asking themselves, what can go wrong? We were talking about tariffs. We were talking about the end of our economy as we know it. Everybody thought President Trump had no idea what he was doing. What could go wrong? What could go wrong was the narrative, and they got out. Instead of asking themselves what could go right. So if you go back and remind yourselves, not including today's move, obviously, but since April the 8th, we're up about 14% in the Dow, about 20% in the S&P, and about 31% in the Nasdaq. We're going to have a little bit of a backup here today, and we can afford to do that if you go back that far. But we have to really look at what could go right. That's how you want to get ahead of this market instead of trading from that other side where you're worried about what's coming around the corner, right?
Yeah, I totally agree. And I think this is the battle that always fights investors is the headlines are always focused on what could go wrong, right? If it bleeds, it leads is the old mantra in media. The problem is the markets don't think like that. The markets are always a glass half full type of mentality, and they're looking forward because you see the markets are not the economy, and if the markets see that things are turning, they start rallying sooner. So we should be looking at what could go right? Government shutdown, that's not the greatest thing. It's going to drag down economic growth temporarily, but what could go right? Well, we have the big beautiful bill that's going to have a real impact as we turn the calendar into 2026, both on the corporate level for profitability, right? The deductions, accelerated deductions, so you're going to get a lot more capital expenditures, which trickles down into more jobs and more business. But then on the personal level, Main Street America is going to get a pay hike just based upon the changes in tax laws, right? And some of the acceleration there. You hear Treasury Secretary Bessent out there talking about prices are going to keep coming down. We're already seeing gas come down. What's next? Coffee, bananas, the things that we consume every day. So there's a lot of positive that can happen at a time when, honestly, corporate America is doing great. Like S&P 500 profit margins are at 13%, which is a historic high. So there's plenty of excess in the system to pay down, to pay it to consumers, to employees, get rising incomes. So I just see the setup here is really good heading into 2026, but you gotta be telling people that, right? And I think that's what the Secretary of Treasury is doing right now. Treasury Secretary is doing very well, which Republicans have failed to do historically. It's like, look, sell them what you're going to deliver it, and then tell them what you just did, and then tell them what's next, instead of just pointing fingers at what the Democrats done wrong. So, look, I'm optimistic, even on a red day where we're all feeling the pain.
I don't disagree with you, and also, they've done a good job of this foreign direct investment. That's going to come into play, I think, a lot more next year as well. I'm just like you. I think that there's a lot of good looking at these numbers, especially what you just said, earnings. Earnings have been great. That Atlanta Fed, I'm sure they're going to take it down a little bit now, but they had been running at a 4% GDP. Well, that because of the shutdown. And isn't it funny, though, talking about the shutdown, the market rallies when we go into the shutdown, because I think that everybody can't stand Washington, and now they know they can't spend money. And now when the market opens up, they're like, oh, here we go again, fiat capital. The government's going to start spending a lot of money, and so they sell the market off hard. I think it's just like I feel it. Sometimes I just feel it's that easy, right?
Yeah, no, it's so wild, right? I mean, you're looking at congressional approval ratings are almost at record lows at like 15%. The government goes away, gets locked down. And I mean, candidly, did we really start to feel the pain in the first 30 days? No, not until you start getting, missed wages for air traffic controllers and SNAP benefits that weren't going to get paid, which is a sad testament. The government of the best economy in the world shuts down, and no one really notices for 3-4 weeks. So it tells you how much largesse is there that we don't need. I think, though, historically, the markets have always done well if we look 6 and 12 months past government shutdowns. The thing that scares me, though, is I don't think that the Democrats have any intention of not shutting the government down again in January. So we could, fast forward a couple months here, we could be staring down the same situation. And I think that's a reason to keep some cash on the sidelines and be ready. I mean, I've put some new money to work in the last couple of days, but still keeping a little bit of a buffer there because we might get another pullback as we turn the calendar year before we get past that and rip higher for the rest of 2026.
There are those that are going to be looking maybe to say they don't want to sell today because of the tax implications. They might do it next, in the first quarter next year. But I also think there's going to be a lot of capital put to work in the first quarter next year. So that might, capital might meet capital there. But to your point, again, another thing that we haven't really said yet is with the shutdown, it definitely damaged the economy. I already talked about it in one of the blocks earlier today, but the estimates range from 15 billion a day to as little as 15 billion a week. President Trump said it was going to cost the 43 days are going to cost 1.5 trillion. Either way, I think that puts more pressure on the Fed to cut. Right? Number one. Number two, agreed. The market's moving like they are now today. The market's moving up like they are, today. That's going to give them a little bit more of a push to cut. I think we had a job loss. Somebody came out and announced a big job losses here again today. So I feel like rates are trending lower, whether you want to believe it or not, on top of all the things that we just said about why we liked the market anyway, right?
Yeah, no, I agree with you. And you have a few Fed governors coming out now saying, oh, maybe we should pause in December. I just think that's them putting up a smokescreen. I think what you pointed out is exactly right. We're getting weak labor numbers, even though it's not the official government data. We know the labor market's cooling, which means the Fed's got to cut. You're just seeing it. And that's a bullish trend with falling interest rates, even for the most speculative areas of the market, right? Small caps, biotech do really well in a falling interest rate environment. And I think you're going to see the Fed stay on course. They don't like to start and stop, right? I mean, historically, last year was an anomaly, but so we've already got 2 cuts in a row. Look for another, a third in December. It's not going to be a 50 basis point cut like some have suggested. It's going to be another 25. But there's no cover for them not to cut. I just don't see it, right? Like even though we didn't get government data for the last, call it 4 to 5 weeks, we still know the trajectory where everything was heading, and it's all going to point to another cut coming in December.
Yeah, and that's going to bolster our thoughts as we sit here. And by the way, if I was a betting man, Lou, we're going to get a new Fed chairman. I don't think he's going to be a really bearish guy. He's not going to be real hawkish. What do you reckon?
No, I don't reckon that at all. I think you're immediately disqualified if you have any of those leanings in you. President Trump says you're fired before you're hired to any of those candidates.
Exactly right. That's going to be one more person on that jobless heap. Okay. Thanks for coming on, brother. Love what you have to say. Always. Great content as usual. Lou Basenese coming to us from New York, brother.